Well, the Fed pauses for a second time running today. So is this a free pass for the housing and mortgage industry? If you're like a lot of other people, you've moved to a fixed rate mortgage. The question is, are adjustable rate mortgages still the #1 threat to the mortgage market? We've got someone here from the front lines to answer that question. Michael Perry is the CEO of IndyMac, one of the largest mortgage lenders in the nation. Mr. Perry, it's wonderful to have you with us today. And I just want to ask you that question. I mean, I was talking to analysts today. They're saying about 2/3 of your portfolio is still in those adjustable rate mortgages. Do you think that we're going to be able to get a free pass thanks to the Fed pausing?
Aaron, good to be here. Actually, it's incorrect. About 3/4 of our portfolio of the loans that we originate are fixed or semi-fixed loans. Only about 1/4 of our loans are the option ARM loans. And I think, with interest rates paused here, and I don't think the Fed's going to raise from here, and I agree with Bill Gross that I think we're going to see long-term rates move down. I think you'll see some of these people who got option ARMs move it back into fixed rate loans.
And so, and thank you for making that clear that you've got only 1/4 in the option ARMs. Nonetheless, do you think that we have seen enough refinancing? Have we seen people who have option ARMs or interest-only loans? Have they moved to fixed-rate mortgages? Have we seen enough of them do that we're not going to have massive foreclosures or defaults?
Well, I think I can only tell you what's gone on at IndyMac. We've done about $30 billion of option ARM loans over the last few years. The average loan-to-value ratio of those loans is below 75%. The borrowers have very strong credit scores, a FICO score over 700. So these are experienced borrowers, high credit quality borrowers. We've sold 95% of that production into the secondary market, and I think those borrowers know what they're getting into. They've benefited from home price appreciation. I think you'll see a number of them, as their payments move up, move back into fixed rate products.
It's interesting, Michael, though, because when we hear Angelo Mazzillo from Countrywide talk, he says, look, I have never in my life seen a soft landing in the housing market, that there's no way to go other than a hard landing. And some of the analysts I talked to, they said, hey, we hope Mike Perry's right, but some could say he's a little bit of a Pollyanna, saying that we're not going to have any sort of a blow up. How do you respond to that?
Well, I think you have to separate that into two things. You talk about new production housing, which is on the front line. You have to have production builders who have to sell their homes into this marketplace. The resale market, a lot of the people who put their home on the market, they don't really have to sell their home at that moment. They're just trying the market out, especially now that it's got towards the top or is near or maybe heading down. But our business is a combination of purchase business and refinance business. More than half of our business is people accessing the equity in their home. And consumers have record home equity. Even if after accessing equity for a long time, there's still over $10 trillion in home equity out there.
All right. Well, Mike Perry, thanks so much for joining us. We appreciate